Hey everyone, welcome back to my channel. Today I'm going to talk about practical uses of Vanna and how I use them for actual trading. Up until this point, I've primarily discussed what Vanna means at individual strikes and how it impacts price. In this video, I want to talk about how I use it every day to help with my trading and the power of the cumulative Vanna picture. Hopefully this will help you come up with trading strategies to take advantage of this data that I haven't covered here. Before we get started, I'll leave several discount codes for trading services I use in the description, including TradeEdX, Voland, and Elite Trader Fund. Lastly, if you enjoyed this content, don't forget to like and subscribe to help me grow this channel. Also, be sure to hit the notification bell to get notified whenever I post a new video. So that being said, let's just get right into this. So just a reminder, I have made plenty of other videos about this. I highly recommend you check out my most recent one. It's about 7 minutes and it gives you a general overview of what the Vanna Curve is and how individual strikes are impacted. But just to cover that briefly here, with Vanna, when we have a strike that impacts Vanna, when we're actually on top of that strike, there is little to no impact there. However, as we get to certain distance away from that actual strike, that's when Vanna will have its strongest impact. I actually go into that in that video and make reference to other videos that will help you understand that further. But it's just something important to keep in mind as you analyze Vanna. So the first thing I want to talk about is that cumulative Vanna impacts, and I haven't really gotten into this before, but when we're looking at Vanna, it's always good to look at it as a whole. So not only look at the individual strikes, which we can make some good, we can inform our trading off those individual strikes, but when we're looking at the cumulative picture and we see that we have a whole bunch of positive Vanna under spot, and then when we're looking above current price, so let's say SPY is right here at this point, so we see all this positive Vanna underneath, and then above it's negative Vanna, then it goes to neutral, and then it goes to positive, but it's not quite the amount of positive Vanna that we actually see below spot. This means that there is typically a heavy skew to the downside. This is looked at as bearish. We tend to favor the side that has the most positive Vanna, and the reason for that is what we've talked about before, and that positive Vanna has that magnet effect. So what this means is that if IV is rising, so price is dropping and IV is rising, which is the typical correlation that we see, that means that dealers will be selling, and because of this positive Vanna, they'll be selling pretty heavily as the price moves down. So they'll be helping to accelerate that move towards the downside. Now, if IV starts dropping and price starts moving higher, because of this, we actually have negative Vanna. Negative Vanna goes against the current move. So normally, if positive Vanna was up here and IV started dropping, dealers would start buying with that move and help bring it higher. However, since we would confront a lot of negative Vanna here, they would actually start selling against that move. So they're hindering a move higher at this point based off of the standard IV to price correlation. So this means that IV rising, price dropping, dealers are assisting it. IV dropping, so IV rising, price dropping, dealers are assisting movement lower. And then when we have IV dropping, price rising, dealers are actually hindering that move. And that's an important distinction there, and why we want to always look at that cumulative picture and take that into account. So when I had called that the market was about to drop, I mean, I was looking at several factors. I was looking at delta, I was looking at gamma, but a big factor was this Vanna picture that you're looking at right here, where we are heavily favoring downside movement, that market makers will actually hinder upside movement. So another way we can look at Vanna, and I've talked about this more extensively in the past, is by looking at large positive Vanna strikes. So this is a picture of Tesla, and we can see that Tesla has a large amount of positive Vanna on the 195 strike, especially compared to surrounding Vanna. Now, you can't really get these individual strikes like this on assets like SPX and SPY because there's just too much Vanna scattered about. That's why it's more important that we look at the cumulative picture that I was just talking about. But when we're looking at individual assets and we see something like this, so we see this large, let's say Tesla is at 200, and we see this large positive Vanna strike right here, we actually can structure our plays around that, favoring that drop to 195, knowing that as IV rises, dealers will help will help accelerate price towards this strike, and it will actually have that magnet effect. And at the filming of this video, it is actually Saturday, February 25th. Tesla has closed around 196, so it's basically sitting right on top of this Vanna strike without flipping it, which I'll get into shortly. Now, on the same side of that, when we have negative Vanna, that's a repellent. So if we get past this strike, it will actually flip the sign, which I'll talk about in a bit, make that negative, right? So it would make moves higher harder. But as long as this negative Vanna remains, as we continue dropping, so IV continues rising, dealers will start pushing against that move, so they'll start buying. So therefore, we can assume that if the Vanna picture stays the same, which it probably won't, that's why it's important to check this stuff every single night, but especially if you're in an active trade or you're using it to inform your trades, but if this were to stay the same, we would assume that Tesla's going to have a hard time going lower than 180 or 185 around there because of these negative Vanna strikes. Now, it is possible due to other factors that it does move through these and these flip to positive Vanna, but I would feel confident knowing that this would be a potential, at least while it stays this way, a potential short-term bottom on Tesla because of this negative Vanna. Now, going into that sign flip, what that means is that if price, so we have all this positive Vanna drawing price lower on SPY right now. And so let's say price starts moving lower. So we have IV rising, price is moving lower. We start passing over these positive Vanna strikes. They'll start flipping to negative. And the same can be said for negative flipping to positive. And this actually happened here. So earlier, about a little over a week ago at this point, SPY was much higher than it is now. We had a pretty big fall this week. And when these were a lot of positive Vanna strikes, and so when SPY was crossing those, these flipped to negative Vanna. And what that basically means is that for price to go higher, it will now have a harder time. So dealers had assisted that move lower, the positive Vanna flipped to negative, and then now if price wants to go higher with IV dropping, dealers are actually going to go against that move while they were actually assisting the move lower. And that's something to think about here, because with the signs flipping, it sort of helps to keep the move lower. And we do want to combine that with other factors. So if we pair it with gamma, and I talked about this in my last video of practical uses with gamma, we can see that there's a ton of negative gamma around these strikes. So essentially, positive VEX, which we just talked about, positive Vanna will have dealers assisting moves towards it. So it increases volatility. It helps assist movement in a positive Vanna environment, right? And it's not only towards it. The same can be said if IV is dropping and you have a lot of positive Vanna in that area. They'll also help with buying. Of course, the negative Vanna can stunt that if negative Vanna is above it. But so when you combine positive Vanna with negative GEX, you have a very volatile region. You have a very fluid region where price can easily traverse through this zone very fast. And we want to look at strikes where gamma tends to fall off, because that can be helpful in determining tops and bottoms, or areas where we see positive gamma. So dealers will actually be going against that move, because remember, when we were looking at the Vanna curve, Vanna does fall off as we hit those as we're on top of those strikes, and that's where gamma takes over. So as the Vanna curve falls off, the gamma curve takes over. So knowing in this area that this is going to be a very volatile area will help me feel confident when I see price action forming in a certain way for a reversal. I'll feel confident in knowing, okay, we are likely at a bottom. There's no gamma present here, or there's positive gamma present here. And Vanna in this particular area is not necessarily having a major effect, or it's positive Vanna, so dealers will assist a move either way because we're in a positive Vanna zone. So it will help me capture both sides of that train, knowing that we'll have large swings back and forth most likely. So we also want to pair it with charm for an overall picture. So when we were looking at the cumulative Vanna picture, and we saw a whole bunch of positive Vanna below spot price, at the same time we have all this positive charm. Now positive charm, spot price doesn't really matter. All the strikes on here have time decay. So now they decay faster depending on the expiration, but still there's time decay. And when there's positive charm, especially in the aggregate, and you can see in this case, excluding a few strikes, most of the charm is positive. Positive charm leads to dealer selling, which I've covered in another video. And then, so therefore, if we have the majority of the positive Vanna is below spot, and we have mostly all positive charm, that's a heavy bearish skew. That means there is a lot of dealer selling occurring. And then to top it off, we had negative Vanna above spot. So yes, while IV is dropping, if we're close enough within that gamma curve of that positive Vanna, yes, dealers will assist buying, but then at the same time as we push into that negative Vanna, they're selling. So we have to consider the net difference there, and then you top that off with charm where they're just selling regardless, and it just gives that skew of downside. It gives that bearish picture when you pair these together. And then we know that going back to gamma, price will have an easier time going lower to a certain degree until we get to these positive gamma strikes. So it just helps paint the picture that a bearish move is being favored. So let's talk about some other practical uses of this besides intraday trading, because not everyone wants to trade intraday. So there are things we can do here. So we'll go back to this Tesla picture. So when we have a large positive Vanna strike that sort of stands out among the rest, now there is one lower, but it's being essentially negated by this negative Vanna here. We can actually look at that positive Vanna strike as a potential magnet, and based on the expirations, you do have to check the expirations, but this would be a pretty good place to set up some butterfly spreads. So if we land on that strike, you cash out big time, and you can typically expect price to park on these unique positive Vanna strikes that stand out among the rest, that aren't negated by nearby negative Vanna that are in between it and spot price. Also, if we start moving lower, so this flips negative, at that point price would be penned within this region. So assuming this negative Vanna remains, and maybe there's some positive GEX in this area to also support this idea, then at that point you could consider put credit spreads, meaning that price will have a hard time going lower. So you can do some put credits to collect premiums that you've sold in order, being confident that price won't actually dip too far below and cost you a loss on those credit spreads. The other thing is if we have a if we're heavily skewed to one side, so the picture we've seen this past week where we have this positive charm and this negative GEX and this positive Vanna, that's all favoring downside. At the beginning of the week, that's a great time to just do some put debit spreads to the downside, right? Give a month time. If you're doing a put debit spread, that theta is helped negated by the put that you're selling versus the put that you're buying. Of course, if it was a bullish skew, then you would do call debits. Very easy trade to set up, very easy spread to take advantage of. One of my favorites, if you are just surrounded by negative Vanna on both sides and positive gamma, both at which causes dealers to hinder moves up and down. So right now we're in an environment where we're all positive Vanna and negative gamma, and dealers are assisting moves in that region, causing a lot of volatility. We don't want to do iron condors, but when it's the opposite, where it's choppy price action, there's not large swings back and forth, we can do iron condors and base that off of our Vanna strikes and our negative Vanna strikes and our positive gamma strikes. Sort of, you're basically doing credit spreads on both sides, and feel confident that price isn't really going to break out of that range. Now, if you do have a slight skew to one side, but you still have a big positive Vanna strike, so let's say that we still felt like, okay, there's a chance that we could drop a little below, but we still have a large positive Vanna strike that's standing out as a magnet. That would be a good use case for a broken wing butterfly, so you could still profit if it doesn't quite land on the strike. And then lastly, in a time where this would have actually been a perfect week for it, right? So this week we had CPI data, we had PCE data, we had a ton of Fed speakers, and we are in a large positive Vanna and negative gamma environment. Great time to do straddles where you just take advantage of the large swings. So beginning of the week, knowing we're going into this environment, say you're not as confident that it was going to go down. I mean, in this case, it was pretty clear it was going to go down, but let's say that there's positive Vanna all over and negative gamma all over, and there's not clear depiction on which side is favored. Charm doesn't necessarily give an edge, but there's a lot of macro news at that point. Set up straddles with a weekly expiration and just take advantage of those wide swings. Close out your winners when it starts to reverse. See if your losers come back and close those out if those go profitable. So that's just one of many ideas that we can use to take advantage of this data. And I'll leave it at that. I do plan on talking more about the cumulative Vanna picture. It's a very complicated topic. Like I said, I've been focusing on individual strikes more so than the cumulative picture, but I do really want to talk about that cumulative picture because it's probably the more important aspect, but it's tough to know how to convey this stuff properly, if that makes sense. But anyway, I really appreciate your feedback on this. If you have any questions, let me know. Maybe you thought of other spreads to take advantage of this data that's working for you. I would love to hear about it if you have, and I will do my best to get back to you if you have any questions. Appreciate you watching.